Welcome to the Brighter Financial Blueprint podcast, where we will explore retirement and legacy strategies for affluent families and business owners seeking clarity, confidence, and intentional wealth design. I'm Megan Clark, RICP CEO, Clark Financial Solutions advisory firm, helping families create sustainable retirement strategies. Welcome back to the Brighter Financial Blueprint podcast. My name is Megan Clark, RICP, CEO, Clark Financial Solutions. I'm excited to talk to you guys today about life protection and what that means. I have a question. Would you go out and drive your car around without having car insurance? No, probably not. Most people wouldn't, because gosh forbid you get in an accident or someone else hits you, then that's a big problem. So we buy automobile insurance and we hope we never have to use it. A lot of times when we talk about life insurance with our clients, they say, I don't need it, I'm good. I don't need to leave anything to my kids. But it's not necessarily about just leaving something to your kids. Life insurance can be used in lots of different ways in your Brighter Financial Blueprint. I'll give you an example. I personally bought a life insurance policy on myself when I was in my 20s. Wait, what, you're thinking? And what I've been doing is I bought a very low amount of life insurance coverage known as death benefit so that I could fund it or overfund the cash value so that the cash value could grow. This cash value has been growing for the last 20 plus years. And in retirement, when I want to take income, I'll be able to access the policy value via a policy loan, and that money will come out to me tax-free. Tony Robbins actually in his book, Money Master the Game, wrote about this, and he called this strategy the rich man's Roth IRA. Patrick Kelly Patrick Kelly wrote a book about it that was called the tax-free retirement strategy, and now the second iteration is called stress-free retirement. There are different tools and ways and strategies to use life insurance above and beyond simply providing for those when you're no longer here. But that part is really important too. So think about your life right now. What would happen if you died tomorrow? Would your family be affected? Oh, there'd be lost income, yes. But it's not just about the lost income. It's about all of the tools and all of the chores and all of the things that you do within your family unit will need to be replaced by somebody else. And some of those are going to have to be paid for. So if you're a gentleman who loves mowing the yard, as my husband does, if something were to happen to my husband tomorrow, I wouldn't be hiring somebody to do that because I don't have the time to mow over an acre of grass every week, along with raising children. So that being said, when we're thinking about life insurance protection and making sure that families are provided for if you're no longer earthside with us, it's important to think about not just your replacement income, but also your replacement tasks and everything that would need to be covered in that regard. So life insurance can be a wonderful tool depending on how you need it. Now, a question I got recently was, well, what kind should I get? Term, whole, IUL, what does IUL mean? Index Universal Life. So whole and IUL are two types of permanent insurance, meaning that they last forever as long as you pay the premiums. Term insurance you buy, and it's only for a set number of years, 10, 15, 20, 30, etc. And then after that time, the policy goes away unless it has a convertible option and you turn it into permanent, which can be really expensive, but a great solution for maybe someone who's not medically underwritable anymore and insurable, medically insurable. So that being said, when this question was posed to me, I simply said, well, just like your taxes and just like your investments, the answer is to be diversified. So having a term policy and a permanent policy can be a really great idea. Having the coverage through your employer is great, but what happens if you leave? Right? That coverage is most likely gone. Some of those policies are portable and you can port them to your own private insurance afterwards, but a lot of times those are more expensive. So it makes sense to be diversified in our entire blueprint from an investment perspective, a tax perspective, and the different types of insurance policies that we have. So I'll tell you a good story and where this came into play. We work with a lot of business owners, and a lot of times business owners, their main asset is their business. And so they don't really think about, they're so busy working in the business, they don't spend the time to work on the business and set things up for what if something happens to me. And a lot of times what happens is, let's say there's two partners and they're both married and one passes away. Well, now the wife is having to step in and try to act as the business owner when she had nothing to do with it. And this can create a lot of tension and rift and a lot of issues. So a great way to satisfy that is to set up an insurance policy that would buy the other partner out if something like that were to happen. And so there's lots of ways to utilize insurance above and beyond just your traditional, I have life insurance for my family. If that's a topic that is of interest to you, definitely speak to a financial professional. I would really urge you to speak with someone that's fully licensed in securities and insurance so that you're not receiving biased advice. I really appreciate you tuning in here on the Brighter Financial Blueprint podcast, and look forward to you tuning in to our next episode, which is going to be all about maximizing your tax efficiency.